Well, let us dive deeper into real estate with Guy Lebas. He's the chief fixed income strategist at Janney Montgomery Scott in Philadelphia. He's a Bloomberg Best, one of the most accurate forecasters of home sales. Guy, good to see you again and talking about housing. We've been taking a look at various aspects, different markets. We just looked at San Diego, for instance. Last week, we had an economist who said, look, we may be seeing a double dip in residential construction. Does that mean to you, Guy, that we could see a double dip, or we are seeing a double dip in housing?
Well, we certainly are seeing a double dip in housing. I mean, housing sales have fallen off of a cliff since the expiration of the home buyer tax credit around April 30th or so. We're still sort of feeling some of the tail effects of that tax credit, but they're going to be totally gone by the time we hit October's data. And by that point, we're looking at a pretty depressed level of home sales once again, and a level that's likely to persist for some time as well.
And so what does that mean for cities like San Diego that seem to be just sort of like climbing out of this crisis? Hopes are high that finally they're going to get rid of these condos, they're going to start selling these single-family homes. Is that just all false hope right now?
Well, there's this classic phrase, all real estate is local. We kind of think it's a little bit different than that. All real estate is regional. So there are certain regions that were particularly hit hard in the 06 to 09 period that we feel are going to be a little bit stronger on the rebound, San Diego, San Francisco being a pair of them. However, the areas that have less in the way of sort of core jobs, core industry outside of the housing markets, perhaps like Las Vegas, where there's been a huge condo boom, are likely to suffer more of a significant downturn in the second round.
And Miami, which we're going to tomorrow, Guy, has suffered from a huge condo boom. I think like they only were able to sell a third of the condos that they built in the last 3 years or so.
And all it takes is a little bit of common sense in looking at the city these days. I mean, there's a huge boom of condos just north of sort of what was the core downtown area of Miami and Miami Beach. And that area, that's a huge backlog of condos. It's not likely to sell soon, especially not with prices still being as volatile as they have been in the last few months.
Right, indeed. Okay, which raises a question about how we can, we can't control everything, right? We can't control the jobs market. We've got to make sure the economy comes back. But the builders themselves, though, aren't they also at fault for creating an even worse situation by putting too much inventory out there in the housing market?
Well, absolutely. And some of that inventory is actual new homes being built, new condos being built. Some of that inventory is distressed sellers trying to unload their properties that they may have purchased or acquired through the foreclosure process. Banks still own a huge amount of real estate. And at the last existing home sales data, we saw that roughly a third of all sales were what the Association of Realtors described as distressed sales. And those distressed sales are really exaggerating the problem, not just because of new supply, but because of supply that's being forced back to the markets.
Okay, very interesting. All right, Guy, then let's turn to the government then, what the government can do. We know there's all this talk about Fannie and Freddie, but the states themselves, and I'm talking about California, for instance, giving out, $100 million in tax credits or whatnot to try to revive the housing market. To what extent are these cash-strapped states able to help those who are seeing their homes foreclosed on?
The states are really not in a great position to be able to do this. For one thing, many of the programs, such as the one you referenced in California, they're relatively small compared to the kind of nationwide, federally sponsored programs that have been pretty beneficial in boosting home sales. The other thing we've seen is that these tax credits, they don't seem to generate an additional level of sales for the long run. What they tend to do is pull sales forward from prior months to the months when the tax credits apply. And that's really not all that meaningful. I think the only thing that's going to fix the housing markets right now is a work through of what excess supply is on there and on the markets, an improvement in unemployment that allows demand to return. And that process is a very long-term process.
Yeah, in fact, we talked with Pulte Homes, the CEO, last Friday and asked him if he would support a home buyer's tax credit. And he said, no, not again. It's only been a one-shot deal for the housing market. Guy, we'll have to leave it there, but I really appreciate you joining us. Guy Lebas at Janney Montgomery Scott.